New credit limit, $20,000. What's going on, YouTube? Welcome to the Credit Plug channel. In today's video, I'm gonna be laying out a strategy for you to be able to access massive amounts of capital, even if you don't have the best credit score. Now, I've talked about the importance of cash flow based underwriting. So I did an experiment with a brand new LLC and the results are shocking. So right here, we actually have a business credit account. All right. So for those who don't know, this is actually the Ramp corporate card. As y'all know, I've done videos on this in the past. I have this account with a different business, but I decided to experiment with cash flow based underwriting techniques using a new LLC. So a brand new LLC that I created. And then what I started to do is make weekly deposits, consistent deposits over a 3-month period. And just like clockwork, I log into the account and right here it says you're eligible for a spend limit increase. After reviewing your account, we're happy to offer you a business limit increase. So the new limit is $20,000 and it was originally $4,000. So usually how this works, they'll base the initial approval off of your average daily balance as well as your transaction history. And with a lot of these cash flow based underwritings, they have a look back period of 3 to 24 months. So that's usually the window. So at a minimum, they want to see 3 months of banking data. All right. But they can go as far back as 24 months to see your histories. My other company, I have a much higher limit than this because it has a longer track record, but I wanted to experiment with this. And as you can see, already we're able to get a $20,000 credit limit on this business credit account that can help with building business credits because this is going to be a financial trade line. Also, the dope thing about the fintech and cash flow based underwriting funding strategy is that your personal credit score really doesn't matter. Now, they will ask you for your social security number, but it's for identity verification purposes. But the main decision is going to be based off banking data. And so a lot of these platforms use what's called Plaid. So Plaid allows banks to connect to your real-time banking details and bank balances. So when they see transactions coming in, they can underwrite you and give you credit limit increases. Now, at one point, it was more of a dynamic spending limit. So if your account went down, then, your limit would follow suit. Not 100% sure if that's still the case, if they're, monitoring that frequently. So let's say, my account went from 200,000 to 50,000, your limit will decrease accordingly. And it seems like they've opened up their business model to incorporate newer businesses, right? Because initially Ramp had a requirement, I believe it was 75K. They've lowered that all the way down, I believe 25,000. And it may actually be lower than that, but I know they basically opened up the criteria. What I'm gonna do right here, I'm gonna go ahead and accept this credit limit increase. All right, so it says, I don't know if you could see this, but let me move my screen around. Okay, so every 31 days, you could submit a new credit limit increase. So let's refresh this and see. So there you have it. Now it's showing a $20,000 credit limit increase. All right, 20,000. All right, so as y'all can see right now, it's now showing a $20,000 credit limit increase. Now, the dope thing about the fintech or cash flow based underwriting is that this does not interfere with any other credit funding strategy. So if you want to get business credit cards, personal credit cards, lines of credit, personal loans, it doesn't matter. And the thing I like about the fintech strategy is that you don't have to wait around or try to, figure out what the sequence is. You can do all of it all at the same time. So with traditional banks and credit unions and different commercial lenders, you almost have to have a strategy as far as which banks to apply for first, because there are certain lenders that are more inquiry or new account sensitive. So if they see you just applied at a different bank or just opened up a new account, they're going to be a little bit more hesitant with extending additional credit to you. But with fintechs, it doesn't matter. I could apply for, Revolut, Ramp, Brex, Bill.com, Divvy. I could apply for all of those at the same time. None of those are going to interfere. So what I've done, and I've done this with a lot of clients, is come up with a fintech business funding strategy with no hard inquiry. So all it's going to rely on is banking data and banking transactions. If anyone is interested in this strategy, I've dropped a link in the description of the video. That's all for today. Until next time, take it easy and we'll talk to you soon. Peace.